Steve, what's the number?
199,000, another big miss here. November revised up to just 249 from 210,000. Private sector jobs were 211, so it looks like we might have lost some government jobs there. Factory, 26,000. Goods producing overall, 54,000, with construction at 22,000. Yeah, government was minus 12. Let's see, average hourly earnings for all private workers, a very strong 0.6%. Again, that's a sign of a tight job market, raising questions about this BLS number or the overall payroll number here. Let's see what else I can tell you. I don't have the unemployment rate. The U6 rate, the broader measure of labor slack, 7.3%, down from 7.7%. I have the Hispanic unemployment rate. I don't have the overall employment. Oh, yeah, wow. The unemployment rate dropping to 3.9% from 4.2%. That suggests, again, the household survey was stronger. I don't have that in front of me. I'll throw it back to you, Becky, and I'll look for some of those household numbers. Black unemployment rate declining to up to 7.1% from 6.5%. The white unemployment rate down to 3.2% from 3.7%. Again, I'm guessing, and I'll come back to you with this, there's, again, a stronger household survey than the payroll survey.
Betsy, this is exactly what you said happened last time. I think you called it super duper weird last time, that breakdown between the two surveys where you saw jobs numbers that were disappointing, but the unemployment number much better than anticipated. Why didn't it catch up this time? What's the difference between those two and how they're kind of compiled that might explain the differences we're seeing here?
Yeah, so I'm looking at the number right now. So just to tell you, 650,000 people became employed. So we had an increase in employment of 650,000 people. How do you do that if you're only adding roughly 200,000 jobs, right? So the math just doesn't add up. So there has to be a couple things going on. One is there's just been a surge in self-employment. And so trying to better understand how much people are creating jobs for themselves rather than waiting for employers to create jobs for them. But sometimes it's also really just a matter of we're surveying two different populations, and it's not perfect information, right? It is our best evaluation of the data through a sample. And we sample households and we ask them who has a job, and we sample businesses and we ask them how many people are on payroll. We see that when we survey businesses, we get a lot of volatility and we get a lot of, corrections in the coming months. So my best guess is we're going to see that employer survey moving closer to the household survey over the next couple of months in the revisions.
Hey, Mike, the market not entirely sure what to do with this. We saw futures pick up by about 35 points for the Dow and then drop back down. I guess the line of thinking that goes into this is that the jobs number was weaker than anticipated, but you've got the household survey telling you another thing, so maybe that's no change for what we can expect from the Fed. Yeah, it's a confusion type reaction, at least initially. I was looking, the Treasury market yields are not really giving up very much, so it goes to that idea that this number, even as a downside miss on the payroll side, on the non-farm payroll side, is not necessarily enough to make people say that somehow the story has changed very much in terms of tight labor markets, two-year note yield not really giving way. You have to let this filter through the markets for a little while before we know that. But at the moment, it seems as if that's what we can expect. The dollar index I did see was softening, and that maybe said people think that it buys the Fed some time. I kind of doubt it's all that relevant in terms of deciding whether the Fed moves in March or not.
Shepard Smith here. Thanks for watching CNBC on YouTube.